Okay, morning all. Hey Bobby, nice and early, mate. Good to see. Get off to a good start. Let's keep an eye on a few things here. Not really. There we go. All right, welcome to TradeSetup. It's the morning playbook. It's close enough to the end of the month, 30th of July. Okay, Jason. Hope we're well. News on 225. Good question. Haven't looked at it. Let's get straight into it then. Where are we? It's just opened, so nothing much on that just at this stage. I think it's a bit of a slow-moving beast. Well, from what I was watching yesterday, fairly slow. So what we've got with this one here, it's come up into that zone there at 22,566. G'day, Peter. So just really looking to see if we can find a base somewhere. This is more of the key level, 22.25. You can see that's the anchor to the leg up. We've had this little pull back in here, and that rallied all the way into the level. So until we get that level break, I think this zone at 22,566 could still come into fire. What I mean by that is, this kind of 1-2 moves down through this low at 22,535 is more than enough to squeeze people out. And then, but what it does, it can do that until it, tends to break the anchor level. The trend up is still intact. Once it breaks the anchor level, then you're looking for that lower high to come into play, the key lower high, and it'll be looking for more something like this. Just extend that across it. Let's just take that off actually. So what I'll be looking for is more, if it breaks down like that, there may be some back and fill, and then you want to see where it's going to start to fade. Okay, at a key higher level, not just these little ones, but a key higher level comparison to 22,566. Then you know that anyone's been buying up here. We're looking for that level to break. It's not happening. We're breaking the anchor, and then we get our shoulder to work off to see if we can get a short on. But otherwise, until this level breaks, still to the upside. We're just looking for these inside high lows to play out to see if we can get that squeeze up. Wall Street, the Dow, sort of much the same. We've had this expansion up off, was it 26,450? And of course, you got this low in play 26,508, which, as it's coming down, people think the trend up is over. Okay, and they start to either sell or getting squeezed out of longs. But until this anchor breaks at 26,450, the market can easily squeeze. It can hold this level. What I'm sort of looking at, forget about these, is maybe that's going to push through, get some stops taken out, because anyone that's bought it late here or bought it here is going to have a stop. Excuse me, just below there. You would expect anyway. That's kind of quite an obvious level off the 5-minute chart of where to place your stops, just below this low here. If you bought it up here, or if you bought it off that level, you're going to tighten it up, lock in a small gain if you break even trade. Stops below there could easily get flushed out and then rally. All right, so again, it's probably sitting around waiting for the Hang Seng to open. Now the Hang Seng, SPY's nearly open. Hang Seng, and everything's just decided to freeze up. There we go, that's better. 30-minute chart. We're up at this zone here, 24,984, and it's hovering around there. Now we're on the 30-minute chart here. So what I'm really looking for, we had some positive move yesterday. You can see now, where was it? That was the open. It was the open here on the 5-minute chart. It actually had this minor pullback and went. Now I got caught thinking that we're going to get another flush up and get some weakness, but it didn't. It just continued to tick off to push higher. So this potentially is confirming that base at 24,550. All right, so if we get a breakthrough here, which I would expect on the open, the way it's just sort of sitting around there hovering, we're expecting a spike. If we get a spike through, especially on a 5-minute, a good spike through, and then that first pullback to see if we can buy into, a bit like yesterday, and see if we can sit on the MAs, buy for a move up to 25,265. Otherwise, flush through pullback, back below that zone. We're looking for that retest and that holding below the zone. Okay, so they're the sort of two major scenarios we're looking at the moment on the Hang Seng. But again, this level here, 24,862 is holding at the moment. And don't forget that CFD pricing is going to be 6 o'clock. So the last few candles, you don't really take into account that. It's the aftermarket, the US market session finished right up at that zone there, at these previous highs. Right, SPY. The SPY looks set to continue up. Again, it could easily flush this zone at 60.17. Flush that and go. because that's not a key level. The anchor to the trend up on that 5-minute chart is just here at 60.08. Okay, so the market loves to do that. It'll sucker in people. It looks bullish. They'll buy in the open, turn around and flush them out because the stops are obviously put under 60.17. That's just about 10 points. So stops, you're on the SPY, they generally have a, hey Pete, you're on the you're on Trading View. Good to see, mate. So you can see with this pop up here, sorry, if it just pops up in the open, it's going to drag in some buys, and then if it flushes them out, the 10-point stop is a pretty good, pretty good level to have on your SPY. If you're trading the futures, it's $250. If you're trading 1, 2, it's $500 stop. If you're trading your CFDs, 10-point stop is kind of a good size stop to have, which means that that's placing you somewhere around below 60.17, especially if you bought it into the close. So the market will need to flush someone out. It's going to either flush those highs, anyone that's sort of sold in here, flush and pull back, and then see if we can build a high low to work off on the long side, or I would expect it's going to flush lower. I'm just sort of picking this level. It can easily flush, retest, and hold that level, hold the anchor and go, and that will take out a few more stops. Now, if there's going to be some negative scenario, we're going to get a break of the anchor, and then we're going to fail at a lower level. Okay, that shoulder didn't really draw that in. So I think the market's going to be bullish. But the Fed backstop, they confirmed that Fed backstop. What my concern is more buy the room, sell the fact type of scenario in the markets. But look, we'll see how that goes. So that's that. We'll get on to gold. Well, we might as well talk about gold. Gold's traded up to those highs, rejected off those highs again. Look, whether or not we get some selling pressure coming in, it's getting soaked up quite well, sitting on top of this MA, which is I think the 150 MA. It's a weighted moving average I'm using now, just playing around with those. So if that can bounce back off this zone, around 1950, expect that to trade up and through. But again, to me, it's got to do with the US dollar. Okay, not really a safe haven because markets are not melting down, and gold gets bought as a safe haven. If we're looking at future, okay, it still doesn't make a lot of sense. It's just purely US dollar based at the moment. Dollar index is been grinding lower. So if we go out to a daily, this is sort of what I'm looking at that 92 level, and you can see this is what we were talking about now, one of our videos just recently, that volatility projection. I'll say that properly. So from high to low, that's the first leg down, and we've had this as quite a correction, this obvious correction, and you go from low to high, sorry, high to low again, just that same distance takes you somewhere around that 92.75 or thereabouts, which is just on that longer term rising support. You can see through here, give or take. Now, it doesn't say it's going to hold. It just means that it could be a zone where anyone that's short is going to be maybe looking at that quite closely to lock in some gains, or anyone that wants to try to buy might start to support it around this zone. But it's well and truly extended on the downside. It doesn't mean it can't keep going, but it's just something, if you are short or if you're based everything around that US dollar keep going down, you've got to be managing your risk, and you've got to be, it's just, how do you say, when you're trading, if you're in a position, it's not about being bullish completely yet, overly confident in it. All I'm trying to ever do is protect myself. Hopefully you can let it keep going, and you're just looking to see, well, what would happen if it trades here? What would happen if it trades here? What would happen if this happens? Is that going to stop me out? Is that going to bring in buyers or whatever? You're constantly looking to protect yourself. You're not worried about, because it's going, if you're short from here, it's going in your favor, no problem. You know that's extended. You don't sit there and say, okay, it's going to the moon. It's like all these bulls talking about gold. We're going to 2000, we're going to 2000. Okay, so they're highly confident. Now, if you get highly confident in going to 2000 and we start to get a correction, are you going to close it out? Or are you not? Or are you just going to sit there, no, we're going to 2000. Now, what if you're completely wrong and you've got no risk management in place and that thing comes back down to 1900, 1800? We're not saying it's going to happen, but there's always that potential. So if you're not protecting yourself, if you're not constantly looking at where you're going to be wrong, it's not real trading. I mean, the easy part's already done. You've entered, you've got on the right side of it, it's running in your favor. That's the easy part. That's done. Now it's managing the risk and where you're going to be caught out, or where you could be wrong or proven wrong. So that's what I'm saying about these shorts. If it comes in here and they start to get some sort of support, what are they going to do? They're going to start to get squeezed out. A bit of a squeeze, it looks primed. And if you go back to gold, where gold is up at these highs, maybe let's go to daily. Maybe that's, you can't say that's not extended at the moment. So to say we're going to 2000, which we could easily do, without a shadow of a doubt, if the US dollar starts holding up here, it's going to put pressure, and that's going to be, there's more than enough fuel on this gold run on the upside to squeeze a lot of people out, to really cause that sudden sharp move down. It could drop $50 overnight, easy. Okay, so just be careful, wary of that. That's what I'm watching anyway, that US dollar. It sounds, what do you call it? Sounds negative, but I guess that's a frame set, a mind frame set you have, mindset. There you go. You've got to have. Okay, so gold, look at crude. Crude's not showing signs where, we're going to be overly bullish. It looks to be still set, just hovering around roughly above 40, around 40, holding above that zone, but it's not going to get ahead of itself because market starts melting down, demand starts crumbling, crude will come down. Okay, so this is suggesting that it's any crude buyer or crude traders looking at it thinking, well, I don't really want to load up long because this market could turn on a dime quite easily. Okay, so it's sort of just holding lower highs, but it's getting soaked up. I mean, there's nothing to say that won't hold up. We punch up and through this zone at 41.50, and we take out these highs, and we're on our way up in a new leg higher. There's more than enough. You can see that sort of curving up, and that's potentially a key higher low. If that's the case, I want to see this broken at 41.50 thereabouts, which in essence could be a good little trade if you're just having sort of box that up there. That's your risk. Okay, trade out the top, risk below. That's confirming you got this low in place, high low in place. You got that squeeze up. That flush down and bounce straight back is a good sign for the bulls. And then you got this. You can see this grind down. So it's different types of action. All right, sudden shock lower. It means that okay, there's a lack of buyers willing to stand in, but they soaked it up straight away and then bang straight back up. So anyone that sold it down wasn't willing to commit at a lower level and really push it prices down. So they're not committed either. It's just that chop. And then all of a sudden you get this kind of grind lower. It means that buyers are soaking up. Buyers are soaking up. Okay, sellers are looking for this kind of move again. They're not getting it, and all of a sudden it stops at a higher level, as opposed to these four lows you can see through here starts to get soaked up. You got this inside level at 40.84, and then a slightly higher level just below, around 40.90, getting soaked up, and we got this sort of grindy, choppy action, and again it's getting soaked up. So I wouldn't be surprised if this holds up and breaks up through the outs. The top side, maybe if you take one, say you're taking along just through here at 41.40, there's a chance that it retests and fails. Okay, and you get this as a key lower high. Does that make sense? So there's, to go early, and you kind of get, you take your break there, and then we start to fail from here. We can take out the bottom, you get stopped out, and it comes and retests here, and then holds and starts to work its way back up again. Okay, so you want to be sort of sure if you take it out the top, to me, it's going to start attacking these 41.92, and you might get a bit of a run on up to the highs. Okay, if that's the case, then you've got your risk below here. You can tighten it up pretty quickly. If you get this sort of inside higher low holding, saying here, you could take a buy and stop at 41.60, for example, and then you got your stop just below. Anyway, that's just something that came to my head when I was looking at it then. So yeah, it makes sense to me if this is a key high low starting to hold, buyers soaking up, and we're just near this, these highs through here. If you move that out, even if you move it up to there, and we've got break out the top, and we get up to here, or we get up to these highs at 41.90, you've got a decent little trade on your hand, 30 cents or so. I mean, you might be able to look there, see it failing, get stopped out for a small gain or a break even. But if it breaks out to the top side, we could be heading right up to 42 or 43. Right, so copper's finding a bit of resistance up here. You can see it's starting to hold as well. It doesn't mean it can't, double top up here and then head south. There's a lot. I mean, this action here is starting to look more, range bound top side, and 287 or so. So we've been speaking about this for quite a while. That uptrend is finished. It's just whether it's going to consolidate sideways and go again, or it's going to fall over and really put the squeeze on these lows. It just shows that, buyers, longer-term buyers, haven't been given a reason to get out just yet. They're not going to add. They're not going to add to a position just yet because the markets are on their highs. We're going through US earnings, further stimulus. There's a lot of headwinds in the US, okay, to the market. So why would you be adding to a position up here? You could get underwater and start to eat away at any profits. So you're better off just to wait till it breaks the high and shows some clear signs it's going to go again. And I think it's all going to be linked to that US dollar. If US dollar bounces from here, this is going to come under pressure. So I think everyone's sort of watching that 92.50 zone on the US dollar, the index, to see if that holds and we start to get some sort of short squeeze, then this could be a squeeze on the longs here. We might get the whole market start to melt down. Don't know. I mean, I wouldn't be surprised if it's more safe haven buying to the dollar if the market melts down. But if not, it starts to just fade through 92.50 and constantly holds lower highs. I think there's some serious lows on the cards. You can crack 90 quite easily, and you go straight through, 88, 84, 85, 86, that sort of levels on the index, which suggests much higher levels on all the commodities and everything. So it's a key sort of thing to watch. Well, that's probably about all that I want to go through. One last thing. Look at this. If anyone doesn't know, Kodak went absolutely bananas. I've never known, what is it, a photo company to be, going into production of COVID-19. I reckon Trump's got some mates there. He's got someone that owns a bit of Kodak, or a mate in the top level in Kodak, to give him some sort of. I know nothing about it, but I'm always skeptical of Trump. I always think he's got his own best interests at heart. And also, if anyone sees, his timing is impeccable with regards to biotech business. They're just swapping and changing. I think it's slowly going in under. I mean, this is a bit of a lifeline maybe for Kodak, but we'll see. I mean, either way, it gives them a chance to get out at the highs. Anyone that owns that stock, get out of there, get out of jail free. I mean, look, it did nothing. It's done nothing for a long time. Let's go to a daily chart, go to a weekly chart. Look at that, sideways, boom. I mean, that's absolutely ridiculous, that move. Absolutely ridiculous. But that's what happens. In the US, you get those kind of moves. I was saying, Trump. So continue to talk up the markets. Okay, that's just his game plan. You get a good bullish move. The Fed's talking lower rates for longer. They're never going to rate. You're not raising rates for a long time. They're happy to keep throwing support out there. The only thing they're concerned about is the virus. That's the government's. That's what they've got to do. Get that under control. Fed can't do it. They can just support any market meltdown. Support it with funds, easy credit, all that sort of stuff. So as soon as legend. Well done. How'd you go? Good. I can't say that. Sesson, how'd you go? It'd be good to see if you had a handy gain on that. I didn't even really know too much about it until the last couple of days, and then started looking at it this morning and went, what happened there? So I wasn't anything to do with it, which is a shame. But I'd have to sit up. If I was going to trade this, I'd have to be sitting up watching it, because it'd be intraday. I wouldn't have bought it. I didn't see it really yesterday. Anyway. Oh, legend. Yeah. That's great. That's really good. What was I saying? So Trump, once the market closed, it was finished positive, finished in the green, rally into the close on the indices, and then he comes out, starts talking about vaccine may be on the cards, soon. He's just a constant, he just spins it constantly. So it's just amazing that, the market's going to slowly stop reacting to it, but we'll see. Maybe they're going to be positive today because of his comments, but we'll see. He's always talking up a vaccine. He's been talking up for a few months now, so. He's been saying it's on the cards. It's very close. It's very close. He said that a month and a half ago, 2 months ago, March, April, May sort of thing. And now we're in July and nothing's really happening. So we'll see how all that goes. Anyway, guys, I'll have to call it a day there. Let's see how we go today. We'll just see what the SPY is doing now, and it's just dropped out of the sky. So look, we could get that little flush and see if we can hold 60.08. So just keep an eye on that. Anyway, thanks for joining me. We'll speak again tomorrow. Cheers, guys. Bye.